All right, everyone, good morning and happy Wednesday, the day before Turkey Day. So, happy Thanksgiving Eve. Let's jump in here, y'all. So, you got your QQQ here, pull them back to the daily 21 EMA. And then if you look at the S&P 500 futures here, you're getting pretty much the same thing. Kind of trading back towards the 21. We're printing a brand new daily squeeze here. But I think, a bit more focus here on tech. All normal stuff here in the context of an uptrend. So just remember, as we're trading up there at 2 to 3 ATR, growing probability you're going to come back down to the 21. As a swing trader, I think there's a lot to like about the little dip here. Just offers you better entries in names like the Amazons, the Googles, the Teslas. So keep in mind, these flushes, they're generally going to be a good opportunity to build your long position, as long as they're not breaking structure. In a dip to the 21 EMA, the first dip to the 21 since early October, it definitely doesn't break structure. So you take a look at Amazon, for example. At the weekly squeeze, you have the 3-day. It's just really tough, I think, to work a good entry up here. But as the Qs come back to the 21, Amazon's doing the same thing. So structurally, nothing changes here. It's a great looking daily chart. The 3-day looks good. The weekly looks good. So I kind of view these flushes is your ideal opportunity to build your swing position in Amazon versus trying to do it up here at 2 to 3 ATR. So Amazon looks great to me here, and I still think this weekly squeeze takes you into target of about 3 ATR. So that kind of puts you towards 3,900 to 4,000. So as we try to catch that move from point A to point B, this is ideally when we're trying to work our entries, not once it's already up here, a little bit extended. So definitely keep an eye on Amazon. Then realistically here with Apple, not really a dip. So I think if this were to come down to the 8 EMA, then you can work an entry. I think it's still a little bit extended. So I do think the weekly squeeze takes you through 170 towards 175. If I'm going to put cash to work today, kind of by default, it would be in Amazon. It may be in Tesla, maybe in Google, something closer to the 21. So I think Apple's got more upside here. I'd wait for a flush. So if you got cash to put to work, to me, it just makes more sense to get Amazon closer to the 21. Because at the end of the day, if that Apple squeeze, if the weekly squeeze in Apple fires to the upside, it's probably a pretty good chance Amazon does the same thing. They should generally move hand in hand. So in terms of picking your spots wisely, you got Amazon back here at the buy zone. And you got Tesla. So yesterday's flush. Here's the thing you have to keep in mind, because I think we're down 6 or 7% yesterday. When you get such an explosive move like this move over here, 800 to 1200, everything expands. And one thing that expands is average true range. So right now, Tesla's average true range, I think, is like $70. We can look at it this way. The 21 is at 1070. Yeah, so you're looking at an average true range of $70. So yesterday's candle looks a little bit aggressive, but I'm sure if we were to look at this on a 15-minute chart, it's pretty ugly. Realistically, though, all said and done, Tesla had an average day. You're down about $70. So it's a bit volatile here, but if you kind of ignore that and just focus on structure, big push is your dip to the 21. It might have to chop around for a little bit. So I would give your trade plenty of time, and I would have the comfort to sit through a little bit of a chop here. But I think if you look at the 4-hour chart, I do think the squeeze eventually here on the 4-hour could take you into the brand new all-time high. It's the first 4-hour squeeze since, back here, when was this, early October? Yes, the last time you had a 4-hour squeeze was back in early October. Pretty good move, I would say. So I'm not quite sure if Tesla's going to move another $400. But the point being, in terms of just the structure of a trend, from a weekly chart to a daily chart to a 4-hour chart, it continues to be structured really well here. So your weekly chart makes the huge push, and then you get that 200-point pullback, but all we really did is pull back to the weekly 8 EMA. That's a sign of strength. to dip to your 8 and immediately find support. So that's still structured. Daily chart gets crazy extended. You just pull back at the 21. So simple reversion to the mean. And then you got the 4-hour squeeze here. So we did take a little bit more exposure to Tesla in the options room yesterday. So we're pretty much locked and loaded here. I do think one you want to be a little bit patient with. And remember, anytime we're back here inside of +1 to -1, you might print a brand new daily squeeze, which in the short term might just mean you continue to chop. But I think if you throw a daily squeeze into the mix here, then we're really working with something. But I think the focus for now, if we're trying to gauge the next move in Tesla, really focus on this 4-hour squeeze. And understand this could move a little bit slower, but when they do fire, you can get some pretty serious moves there. But the major point being, if you like Tesla up here, you should love it back here at the buy zone. And then next one here is Google. It's all the same stuff, right, y'all? Good uptrends, a bunch of squeezes, but the little flesh here in the market brings you back towards the buy zone. So to me, Google looks awesome here. I kind of tend to like any triple squeeze. So that's what you got on Google. Daily squeeze, 3-day squeeze pulling back to the 21, and now we're printing a brand new weekly. So quite the squeeze fest here for Google. But if you look at that trend, you look at that structure, and you believe this takes you into higher prices into December, into January, this is where you try to work that entry. Down near the 21, down near the 50. Not so much up here after you've already rallied for 3 to 4 days. So that's my mindset right now, y'all. As long as we hold structure here, any downside, I'm going to view it as nothing but a dip to the 21 EMA, which again, we haven't had since early October. It's the last time we were at the 21. So I'm just going to look at it as a normal dip in a bullish market. Potentially try to put a bit more cash to work here. And then one more here in Netflix. Daily squeeze, daily squeezing. So I look for the 50 to hold the support there. But there's another example. If you take your entry up here, you haven't had the most enjoyable 3 to 4 days. If you're taking your entry back here on that flush into the 21, you might be back to break even. Worst problems you could have as a trader. So that's kind of the focus here for me. Major tech stocks, big FANG. Also interesting, though, continues to be the financials, which if you look at XLF here into last Friday, it kind of opened that door to potentially fire the daily squeeze to the downside. But look how quickly they come in here and scoop it back up. Real quick scoop. So it's not the cleanest daily chart in the market. This does continue to be a good trend, especially on the weekly chart. So a little bit sketched there last Friday. Quickly regained some good structure. And as I'm going through the scan results last night, a lot of the names continue to be financial stocks. So, the Wells Fargos of the world. It's a pretty good looking squeeze. I kind of think Schwab might look the best here. But there is good looking structure outside of tech. So financials are pretty solid, I would say. I think another good looking group is your transports. Really good push. Dip to the 21. And now you're printing a brand new daily squeeze. So the top 2 holdings in the transports, UMP, you kind of missed that bus. And UPS, I think, is a great setup here. Transports keep pushing. Could get some solid trades out of those two. Or you could just trade the transports. So while my focus is going to continue to be on, the triple, quadruple squeezes in these big fangs, don't want to ignore the financials. Not the worst looking structure. Transports, not a bad looking structure either. So there is opportunity outside of tech, but that's kind of where my focus is going to lie. But I've pretty much covered everything I want to cover here setup wise. I do know we were talking about coin early on Monday. Kind of strikes me is the market. As the market comes in, stocks come in. So the trade that we discussed earlier this week, selling that out the money credit spread, comfortably holding on through a flush to the 50. I still like that idea here. So I got some pretty good exposure. I do want to be careful about just how much cash I get out there. But that looks pretty good. There's Roblox, a really strong push. So that would be pretty interesting on a dip to the 21 EMA. And then, believe it or not, GameStop on a 3-day and a weekly chart kind of looks poised for some action here. But that's what I got for y'all. Last thing before I jump into any chart requests. This is probably going to be one of the more important charts here for the next few days, the next few weeks or so, is your volatility index. And I know we've had this discussion before, but just kind of a quick, recap. As the, as your indexes get extended, and then they pull back to the 21, you get your spike in volatility. So the major thing we're going to look for here, if in fact the market is going to find support and then gradually turn back towards the upside, you'd need the VIX to come back in. So study the last couple of years of price action in terms of the volatility index. You're going to see that rhythm. So VIX is kind of dead in the water. Market's extended. Then VIX makes that sudden push to 2 to 3 AR, typically while your market pulls back. Then when VIX dies back down, the uptrend continues. So if you look at VIX heading into the open here, it isn't quite screaming to me, yeah, the selling pressure is done. So you are looking for VIX to come in here. You're looking for the market to hold structure. And when that all unfolds, after your dip to the 21, then you're looking for the turn back towards the upside. But realistically, you're not going to get that turn until the volatility index dies down. So keep a close eye on that. But that's what I got for you. Let me take a swig of some juice here, and then I'll get caught up in the chat, see what y'all got. But I think a buyable dip is the moral of the story here. Good morning, Terry. Good morning, Goodell, my brother. Good morning, Jess. Good morning, Roseville. Yeah, you could have the shooting star there on Apple. I kind of got like a 30, 60-day outlook. I think that weekly squeeze could take us higher here. Yeah, Danny, so on Tesla, and again, this is a thing with stocks with big average true range moves. And I know we talked about this yesterday, but, up here at 2 ATR, visually, you wouldn't think it could quickly come down to $1,000. It's just kind of 2 average true range moves. So as much as I love a stock that's got a bunch of momentum under the surface, one thing we do have to take into consideration is kind of, use the term violence potentially. The volatility and the violence of the consolidation. Where in terms of structure, this is a good structured daily chart. But as we go from 800 to 1200, your average true range is going through the roof. So you get these big pushes, you get your consolidation phase. But from +1 to -1, talking like 10% swings, which it's pretty volatile even if it's structured. Eric, you took a position in Schwab yesterday. What'd you get? Hey, good morning, Jason. Yeah, Eric, I like Schwab. And again, last Friday, things are looking a little bit suspect here. But to quickly get back above your 21, for XLF to kind of quickly get scooped up back above the 50. And actually, here's a better way to look at it. So you got a few days of selling pressure here. So Monday through Friday, that looks a little bit soft. But I think we always want to take it to a weekly chart. Because if you look at a weekly chart, which is in a beautiful uptrend, positive histogram, in a weekly squeeze, positively stacked DMAs, that's 3 to 4 days of selling pressure. From a weekly charts perspective, it's just the ebbs and flows of a really strong uptrend. Meaning we build up energy at the 21, you get your push into about 2 to 3 ATR, then we gradually revert to the mean. just about 2 to 3 ATR. Then we revert back to the mean. This is why I love weekly charts so much. Because for you to get that pullback on your weekly trend, your daily chart has to get a little bit sloppy. But the difficulty is trying to short into this. Based on daily structure, I can see trying to short the financials over there. But if we just take a look at a weekly chart, all this is, quite frankly, until you're proven wrong, is your really strong weekly trend pulling back to the 21. So the daily chart looks a little bit iffy over there. It's just a reversion to the mean. Looks a little bit iffy over there. And the Qs are the poster child of this year. Is, a lot of us, Simpler, myself included, we've tried to short this thing a few times this year. But here's how you kind of got to look at it. So we're shorting into that move because the daily chart looked ugly. You could have tried to short into that move because the daily chart, the 30-minute charts look ugly. But in terms of the bigger picture context of this trend, at no point over the last year and change has this trend on the weekly chart even threatened to shift course to the downside. Haven't had a single close under the weekly 21. So from that bigger picture perspective, here's your beautiful uptrend. There's your ultimate buying opportunity. Your dip to the weekly 21 offers entries that could carry you higher for a month and a half. And I think we can all agree as we look at a weekly chart here, that's all pretty straightforward. You can see how bullish this trend is. But because we sit here and we're working these trades Monday through Friday, that beautiful dip to the weekly 21, it's going to look a little nasty on your daily chart. So that is a shortable structure on the daily chart. The difficulty is, though, you're just dipping to major support. And that's why shorts kind of get their faces ripped off. You're shorting at the very level. If you're a swing trader, you should want to get long. So all that being said, it's kind of how I look at the financials. Till this loses structure, this has been a good looking uptrend since, this time last year. Hold the 21, hold the 21. So I do think the financials look pretty good. The energy sector was getting tossed around a little bit. But I think we have a bit more context when we look at a weekly chart here, right? The ebbs and the flows. You build up energy at the 21, gets you to about 2 to 3. At this moment in time up here, we already need to know there's a growing probability of your reversion to the mean. But you got to understand that doesn't change the bullish structure. Now your daily might look a little bit iffy, but hopefully you get the point here. What might look like some sloppiness and some weakness on your daily chart, from a bigger picture perspective, might be one of the better buy the dip opportunities you get. Now, it's not to say every dip to the weekly 21 is the ultimate buy the dip. But I think we can agree, as long as the uptrend is in structure, it is one of the better buying opportunities. But a lot of times we're too busy trying to short it. So hopefully that makes sense. That's kind of how I look at the financials. Your daily chart was a little bit sketch last week. Your weekly chart looks perfect. Weekly chart looks great. In DefCube, here's why I think you should be fine. Really, regardless of what you get in the financial sector, that's the trend you're playing. So if XLF itself grinds towards $43 here into the end of the year into January, Schwab should be trading higher. Bank of America, Goldman Sachs, JP Morgan, and this looks just as good. So always keep that in mind, because when I started trading options, and my first time trading the squeeze, ironically, it was a daily squeeze in XLF. Now, for diversification's sake, what I did was I bought calls on JP Morgan, I bought calls on Morgan Stanley, I bought calls on Bank of America. I also bought calls on XLF. And it worked in my favor. But needless to say, it was all the same trade. So if this rips into a new high, it's good for the whole gang, pretty much. Eric, nicely done. Nicely done, Eric. All right, so KR, I love your question here. Did the selling from Musk yesterday have an impact on Tesla, or was it just normal volume? So I think when we're trying to gauge normal versus abnormal, you know, a typical day of selling pressure, a typical day of accumulation versus big time selling pressure, big time accumulation. To me, average true range, really important concept that does provide a little bit of context. So remember, that's what my Keltner channels are measuring here. Your base is the 21 EMA. There's one average true range, two average true range, three average true range moves above the 21. And then there's -1, -2, -3. But from your 21 EMA here at 1070, an average true range move takes you into about 1140-ish. So we're talking about a $70 move here, right? So this provides a good context where what would be an average day for Tesla today? We're at 1109. We're at 1109. Let's call it 1110. We're at 1110 minus $70. So you're talking to move down to 1050 today, an average day. However, it's also a 5.5% move to the downside. That to me is why that's an important concept. As we make this explosive move over here, average true range is now going through the roof, which just means your consolidation phase is going to feel a little bit more violent than normal. Typically in a consolidation phase, there might be a 1 to maybe 2% difference between the 21 and +1. It's a tight range. We're up 1%, we're down 1%, and that's all normal price action. Now, if you look at the structure of Tesla over here, anything inside of +1, -1, it's just average junk. So hope that answers your question, and it's a good question. Looks like an extreme day, but there's really nothing extreme about a stock going from +2 ATR to the 21 EMA. Again, this just feels like it's a bit more because you're going from 1200 to 1060. It's a pretty sizable move. But, that's no different than, say, Adobe going from 670 to 660. Not a big move percentage-wise, but relatively speaking, it's kind of the same thing, +1, -1. Roseville Starbucks. Fiance loves her some Starbucks. All right, so what do we got here for the Bucks? Weekly 3-day, daily 4-hour, 2-hour squeeze. So we do have squeezes. We are squeezing. So you're still in a good uptrend here. Momentum did shift. Things did get a little bit sloppy. But again, +1, -1. So your trend doesn't really shift if you're still kind of in that +1, -1 range. So the trend is still intact. The one thing I'd say it's missing right now is that momentum profile. Meaning the histogram isn't quite positive yet. You don't quite have stacked EMAs. Doesn't mean you can't trade it though. If I'm going to trade this, I'm going to view it as an early entry. Meaning I don't quite have expectations that Starbucks is back at the highs immediately. Rather, I take a 2.5% risk now. I give it plenty of time till expiration. Then as that histogram begins to gain bullish momentum, then I'll take another chunk. In the event you're a little bit early here, I think scaling into a position makes a lot of sense. Where, for comparison, when you go back to Apple's weekly squeeze, positive histogram, green 10x bars, stacked DMAs, That's kind of the structure of a squeeze that we suspect is going to make a move sooner rather than later. But to look at Apple's weekly squeeze back here, is the histogram is still negative. Visually, this is what I would prepare myself to sit through with Starbucks. Good trend, good consolidation phase, but we're not quite packing that momentum punch just yet to get us into the expansion phase. And you can still walk away with paychecks here by giving your trade plenty of time and doing credit spreads. Let me know if that makes sense, though, in terms of, we can find squeezes that look like they're ready to go very soon. Then we're going to find squeezes that might need a bit more time. So just kind of game a comparison here. Squeeze above the 21, positive histogram, probably still had stacked DMAs and green 10x bars. Kind of look for that to go in the next 3 to 4 weeks. Something like this, I might be looking all the way out to January earnings. And actually, that might not be the worst idea there. Might not be the worst idea. Fly Guy, CVX. Structured pretty well here. Kind of going back to XLF and Schwab and Wells Fargo. That's the move you're playing. Energy goes back towards an all-time high. It's somewhat difficult for Chevron to do anything otherwise. So the discussion really starts here, and we already had the discussion. Daily chart a little bit soft last week, but all you're really doing is pulling back towards your weekly buy zone. So bigger picture trend here. In terms of the context of the push that started back in September, structured very well. Squeeze it to 21, nice push to the upside, reversion to the mean. So you're still structured there. Not the cleanest daily chart going, for sure. But the point being, as long as you got structure in XLE, then you take the squeeze here in Chevron, could be in a good position for higher prices. But that's the bus you're pretty much riding, is XLE. Which I don't hate here, so I think got a good shot at some continuation if XLE continues to firm up and then continues its trend. But a good setup there. See how these futures are doing. Brand new daily squeeze in the S&P, which, if y'all can be patient and if y'all are willing to sit through a few more days of chop here, this chop might turn into our best friend in terms of that potential Santa Claus rally. So ebbs and flows. Big time push off the 21. Then we slowly revert to the mean. Right? So we're going to go from compression. There's compression. There's expansion. Now we're kind of going back into compression here. But in terms of trying to find a structure to work with for a Santa Claus rally, in my book, nothing better than a daily squeeze in your index. And I actually think the QQQ, that could be the perfect pitch here. So mind you, maybe technology put in the high for the year back here, and it's done and over with. I don't think that's going to be the case. What I do think is more likely is finally got the flush to the 21. I think we could chop back and forth here for a week. So remember, anything between +1 to -1, just chop. Right? Normal price action. But if you start to print a new daily squeeze here, I think that could potentially catapult us into December, January. So that would be ideal. And you look for something similar in Amazon. You have your weekly, which is looking great. Your 3-day squeeze is looking great. Now if we get another daily squeeze in the mix here, and realize the importance of this dip, we might finally be able to play everything kind of going hand in hand. What I mean by that is my favorite time to trade tech stocks, to trade FANG stocks, is when the QQQ and the S&P 500 have their own daily squeeze. So when your QQQ prints a daily squeeze, goes into that consolidation, builds up that momentum, and then fires to the upside, understand Apple, Amazon, Facebook, Google, Microsoft, it's almost difficult for them to trade lower. They're just going to move with their index. So when the QQQ is setting up in a squeeze, potentially gearing up for 2 to 3 ATR push, already by default, FANG stocks are in a position to perform pretty well. Now, if we start to throw into the mix that we don't just have a daily squeeze here on the QQQ, potentially we get a daily squeeze, we still have the weekly. Then take into consideration, Amazon's got squeezes everywhere. Google's got squeezes everywhere. So it's been quite a while since you had that daily squeeze in the index. At the same time, you got the daily squeeze in your Amazons, your Googles, etc., etc. So to see if that's how things play out here is going to require some patience. But to me, that could be the ultimate pitch into the end of the year. We're in an uptrend, but then if we get daily squeezes, should be pretty solid stuff. To be determined, of course. To be determined. But one last reminder here, what's going to be a big part of that? Your volatility index. Going to be a really big part of that. We don't curl back towards those highs until this dies back down. And if you haven't done this exercise, I think you'd do it this weekend. Get 2 daily charts, put them side by side. Get a daily chart of the VIX, get a daily chart of the S&P 500. It's the same rhythm over and over and over again. VIX is dead in the water, so everybody's complacent. Everybody's buying out the money calls. Market's up there at 2 to 3 ATR. Then the market gets the healthy reset. You get the big spike in VIX. Then VIX dies down and the uptrend continues. So in terms of the stages of that, we're getting the spike in VIX. We are getting the pullback to the 21 EMA. Nothing, leading us to believe that's done and over with quite yet. So tie all that together with a little bit of patience. Everything's looking pretty good here on my end. I, for one, think we should rejoice. I am thankful that we've gotten a dip to the 21 EMA. Maybe the uptrend is over. I kind of doubt it. But in the event the uptrend is not over, I think 5-6 weeks from now, we're looking back saying, thank you, market, for the early Christmas gift. Otherwise, we keep sitting back, just sitting here watching, trying to work entries at these, 3 ATR extensions. It's not the best game plan. So that's the way I look at it. Unless technology has put in the top for the year, this is a total gift. And we'll see if that changes. But that is what I got for y'all, my friends. That is what I got for y'all. So, I do appreciate y'all jumping on here. I know it's a short week in the market, but it is good to see a lot of you in here still putting in some work. Make sure you detach a little bit tomorrow. To the extent you can, shut down the charts, shut down the mobile app, spend some time with family, do some good eating, some good drinking, and then we are back to it for a half day on Friday. And then back for the full grind next week. Let's see, next week will officially kick off. Well, on another note, I better start Christmas shopping soon. But we're rolling into December. Diciembre. So let's make the last month a good one, all right, y'all? But I hope you enjoy the rest of your day. For those of you in the options room, I'll be on the mic here just about an hour. I think Chandler has got the open, so I'm going to go tune in there and give him hell. I'll talk to the rest of you guys soon.